I'm going to say before I get started, this is like a crash course. This is nowhere near all of the information that you need, but this is very basic information. And I will tell you, you're not going to learn from just this one video. You're going to have to continuously learn the stuff that I'm talking about. You're going to have to go back and look at it. You're going to have to just keep regurgitating all this information to get better understandings. And I'm not covering not even half of the stuff that goes with trading options. I'm giving you the very basic to get started. I've been doing it for 4 years, and I do also feel like a lot of these people who sell courses and stuff and do all that, I do feel like they have a lot of not unnecessary information, but there's a lot of things that they try to make you study that you really don't even need. Like, and I'll say quickly, like the Greeks, I'm not saying don't learn them, but I used to spend so much time trying to understand those things. And when I'm buying my contracts, I don't even look at it. That's all I'm saying. Like, I'm not giving you stuff that you should be putting so much time into in this. I'm giving you the very basic, okay? So anyways, options. What are options? They are contracts that gives the buyer the right but not the obligation to buy or sell 100 shares of a stock at a set price, which is called the strike price. I don't know if you guys can see the whole screen. Which is called the strike price at or on a certain expiration date. Okay, so basically. And another thing, trying to understand that, I've never exercised the contract in 4 years. I don't know if I ever will. I feel like the people with the big money do that. So that's why I was trying to spend a lot of time understanding that. But I've never had to exercise a contract. But yes, understand what it means. You're basically, hold on, I have an example down there. So we'll get to that. If you're talking about call options, you're betting that the price goes up. You're anticipating, I shouldn't have said betting, but you're anticipating that the price is going to go up. If you're playing put contracts, put options, you're anticipating that the price is going to go down. Now, with contracts, every contract represents 100 shares of whatever stock you're talking about, okay? So if you buy one contract, that holds 100. If you buy an Apple contract, it holds 100 shares of Apple, right? So let's just say Apple is $100, right? And you are anticipating that Apple is going to go to 120 within 3 months, whatever. Okay, so you're going to buy a contract but you're just not sure, but you're anticipating it goes up to 120. You're going to buy a contract that gives you the right to buy 100 shares of Apple at $100 within 3 months. So the way that you benefit off of that is, let's say Apple goes to 120 within 3 months. You have a contract that gives you a right to buy them at $100 instead of 120. That's when people would exercise if they wanted to actually buy the shares. But again, 100 shares of Apple at $100, you got to be one of them big businesses, or what they call, why did I just go blank? The institutions, there you go. Them institution buyers, right? Okay. So, but now when you have the contract, as long as Apple's going up within that time frame, you're also making money on your contract because your contract is gaining value. Okay. And once it gains value and you make money, you then turn around and sell it back to the market and you lock in your profit. Okay. So calls are the right to buy, puts are the right to sell. Your strike price is the price that you're anticipating the price to go to on a contract. Your expiration date is the deadline of the contract, and your premium is what you pay. I'm going to put all this together with live visuals, and it's going to make more sense. But please, again, be mindful. I am on TikTok Live. I cannot it would take like 5 hours to go really in depth. I'm just trying to give you guys some basics to take home and study. Okay, so I had on the example, if DraftKings is $30 and you buy a $35 call for $1.50. Now remember, beginners, they're gonna look like, the price of the contracts are gonna look like this, $1.50. But again, it represents 100 shares. So all you do is you move the decimal over, you like times it by 100, or you just move your decimal 2 places to the right. You're paying $150. Okay, so it's not $1.50, but that is how it is. That's how it's priced. But times it by 100, it's 150. So if DraftKings is $30 and you buy a contract, a $35 call for $150, your betting DraftKings goes above $36.50 before expiration. So that, where I got that number from, is you take your strike price, which is $35, and you add your premium, which is $1.50. That's where you're going to either break even if you're at that number on expiration. That's where you're going to break even, or that's where you want to be above to make money, okay? Again, all that is, you don't have to really try to explain that, but that is, and I'll show you that on the chart too, how that works, okay? So you have your break even price, and then the more that it goes up, that is the more money that you make, okay? Now, with option contracts, there are things called Greeks, Delta, Theta, IV. There's another one that I didn't put on here, Delta, Theta. Y'all, where's the guy that was in here? I know he knows. It's Delta, Theta. There's another one. Delta, Theta, high volatility. We'll get to that when I go to Robinhood to show the Greeks. So this was the thing that I was talking about. I tried to spend forever trying to understand the Greeks because I was like, what? I can't get it. I don't understand. And I didn't even really have to spend that much time. But basically, the delta is how much the option moves per dollar that the stock moves. So there's going to be like a delta number, like it'll be like 0.3 or point whatever. And if you move that decimal 2 to the right, it gives you a whole number. So for every dollar that, let's just say the delta is 0.2, which is $20. Okay, for every dollar that DraftKings goes up, the contract's value goes up $20. Okay, so that's what the delta is. It's showing you how much your contract will go up or down depending on every dollar that the stock moves up or down. Okay. Theta is the time decay. That is letting you know how much you're going to lose as time goes on. Okay, so theta is what you lose value in your contract as the days go by. So you really want to be going up as soon as possible, because every day that goes by, the contract is losing value just on the days alone. And if you pair that with, if it's not even going your direction, it's going to eat you. So you're getting ate by time and direction if it's not going your direction. Now, the implied volatility, IV, is how expensive options are. So if the IV is high, they're going to be expensive, meaning the implied volatility, like the volatility that's expected or anticipated on a certain stock, right? So, and the IV, it really gets high around earnings with certain stocks. So that's why I don't like to do earnings, because that IV be killing you, because it's like everybody's thinking these stocks are going to go a certain way for earnings, and the implied volatility is high and the contracts are highly priced, okay? So, but you guys can write that down, those, and then just write down the Greeks. If you want to go more in depth, you can find information on that anywhere. Google, you can go to YouTube. There are so many creators that will break them down for you. So do that if you wish, okay? Now, candlestick. I'm also going to figure out how I'm going to turn my note thing into a PDF and share it in the chat or something, or on my page, so that you guys can have a copy of this. I don't know how to do that yet, but I know there's a way that you can do that. So the basics of the candlesticks. Now, you need to know candles when you're trading, right? That's going to be like your biggest thing. You need to learn how to read a candle. Now, if I were to tell you anything that you should really spend a lot of time on, it is candlesticks. You have to know how to read candlesticks. I have this link for this PDF. It's a free PDF book. It's called the Candlestick Trading Bible. I read that, I studied that, and it helped me. So, yeah, I'm going to have all this stuff linked at the end somewhere. I'm going to put it on my page so that you guys can get access to it. But I'm going to go over the basics of the candlestick anatomy. Now you have your bullish candles. Now bullish, for new people, bullish means price going up. Bearish means price going down. You have bull cycles, you have bear cycles, right? So if anybody's bullish, they're anticipating a stock to go up. If anybody's bearish, they're anticipating stocks to go down, right? Now, with the candlestick, the anatomy, you have the opening of a candle. Now, on the green candles, the opening is always going to be lower than the close, right? So this one, the stock might have opened here. Let's just say, I don't know, let's just say $10. It opened at $10. We could say the high of the candle, the highest price that this candle hit, we could say $15, but we could say it ultimately closed at $14, right? So you have the open, you have the high, and you also, let me go back. You also have a low, like the lowest that it hit. So if it opened at 10, it might have hit, we could say $7, right? The high was, what did I say, 15, ultimately closed at 114. So that is a bullish candle. Now the candlesticks are going to be on different time frames, which I have examples of all that. We're going to get into that. But they're going to be on time frames. They're going to be on the daily chart. You have the weekly, you have the monthly, you have intraday charts, meaning like anything less than 24 hours. So that you have 5-minute, 10-minute, 15-minute, 30-minute, 1 hour, 4 hour charts intraday. Right? So if we were on the daily chart, this would be a full day worth of a stock movement if we were on the daily chart. So let's just say that this is Apple. On Friday, what did Apple do? Okay, Apple opened at $10. At some point, it went to $9. Some point during the day, it went to $15, and then ultimately Apple closed at $14. Did I say 115? Did I mess it up? Y'all know what I'm saying though, right? 10, 9, 15, and then closed at 14. I thought I said 115. Okay, we'll get into more of that. Now with the bearish candles, it's the same thing, but it'll be opposite. If a candle is going down, the opening price is going to be higher than the close price. So let's just say this is Apple. It opened at $10. At some point, it reached $12. At some point, what did I say this was? 10, 12. At some point, we could say it reached $7. But ultimately, it closed at $8, okay? It opened at 10, closed at 8. Loss is a bearish candle because it started at 10, closed at 8. So that's the basic anatomy of a candle. Again, I'm going to link that PDF. Study your candles. If you don't spend your time on nothing else, study the candles and the behavior of candles, okay? Now, what I will say, there are a lot of candles that you can learn. When you read that book, it's going to be so many. What I will tell you is that yes, I've studied candles, but there are two that I really pay attention to. Okay. That is the engulfing candle and the hammer candle. That's my pick personally. I like those as my actionable signal candles, right? When you start learning about candles, you're going to learn that some candles are actionable, where you can take action on them in the market. My two personal favorites are the engulfing candle and the hammer candle. You can start with just those two. Read the book overall, learn candles, zone in on the engulfing and the hammer if you want to start with just two, or you can go and pick your own. But when I'm teaching, even when I'm going over my watch list, I'm always pointing out engulfing candles or hammer candles. When I get in trades, they're typically almost always because of an engulfing candle or a hammer candle. Okay, those are two very popular ones that you can zone in on and learn those. Okay, because you're not gonna learn every single candle. It's just too much. You do need an overall idea of candles and the behavior. Zone in on those two for bullish actionable candles, and I'm gonna show you guys those on some charts too. What? Go ahead, Malachi. Now, the key candles that I'm talking about, they're usually found at key levels, okay? It's just, you're not looking for them anywhere. It's got to be at key levels, and I'm going to show you that. These are some bearish candle patterns. I personally do not like to play the market to the downside. You don't have to learn both. Yes, know them, but I'm a bull, okay? I like to play the market when it's bullish. I do have a Discord. I just made it. It's in my bio. So you guys can also, I was going to go over that on the end, but I do have a Discord. It's in my bio. The link is in my bio. I just made it. So, because a lot of people try to talk to me during market hours, and some are on Instagram, some are on TikTok. So I'm like, let me make a Discord where we all can talk like during market hours, or just kind of if you have questions for me during the market. So that link is in the bio. I'm learning how to use Discord, but I do know how to, as far as my own server, I'm in a lot of Discords, so bear with me there. But I know how to get in there and chat. And y'all join now while it's free. Okay, I'm just gonna put that out there. So anyways, I like to play the market to the upside. I do know how to play it to the downside. I just don't prefer it. I actually, now that I said that, that just reminded me, I seen something I wanted to go over because it had a bearish setup. I'm gonna have to figure out what stock that was. So we have bearish candlesticks too. So if I were to play something to the downside, I'm still using the engulfing candle, but the bearish version of it, and then the hanging man, which is the bearish version of the hammer. So still pick you 2 or 3 candles that you like when you read about it and zone in on those and keep those as your actionable signals, whether you're going to play the market to the upside or the downside. I suggest learn to play it to the upside first. The downside is risky, but you can make money there too. Like, you get fast drops and then they just bounce and go around. But then the bullish, I like it because it's kind of slower. It gives you time to reassess sometimes. So yeah, those are some bearish candle patterns. Now, another thing, I said you're not going to have to spend so much time trying to stress yourself out and learn everything, because you're just not going to get to it. You just need years and years just to learn a lot of stuff. But the swing lows and the swing highs is something that I suggest you learn. Put time in learning that. That is something you should put a lot of time and stress yourself out learning. This was once I learned this, game over. it was game over. And that's when I was really making money. So, and we're going to go over these on charts too, but I'm going to break it down. So, when you're trading, the market, there's something called market structure, right? And there's only 3 options of market structure, excuse me. It could be trending up, it could be trending down, or it could be going sideways. Those are the only 3 options. So a bullish market is trending up, a bearish market is trending down. If it's consolidating, it's going sideways, right? Now, in order for market structure to be trending up, it needs to be making higher highs and lower lows, okay? So do you see these swing highs? These are, I'm going to go to a chart too where it's going to make more sense where I could draw it out. But see, we have the swing high here, and we have a swing high here, and then we have the swing high here. You see how it gets higher? So higher highs, and then higher highs, higher highs, higher, I'm tongue tied, higher highs. On the uptrend, higher lows. It's making higher lows on the uptrend, right? So you see, this is the swing low, and the lows are getting higher. Don't look at this one for a second, but these two, if it's going up and then we're making higher highs, higher lows, we're in an uptrend. Now, if you were to go down the other way, if you were making lower highs and lower lows, you're in a downtrend. And I just noticed that that's not a good example on here for the downtrend, but I'm going to go on the chart and show you guys a better example too. But I want to point out the swing lows, why those are important, right? So these will tell you a lot. If this is a stock that you're in and it's coming down, but you kind of want to take it up, like you want to trade it up, you got to know, okay, well, when is it going to start going up? When all these are being created, all this drop, and then you have a swing low and this second candle confirms it, this is kind of telling you that buyers are getting exhausted and the stock is potentially about to go the other way. So when I see swing lows created, and this could be considered a hammer candle too, and then a key level would be like if it's at a support or a moving average, and I'm gonna show you guys that. So once the swing lows are created and this second candle that confirms it, your entry is gonna be the break of that. Let me zoom in. This is something, I take all my trades like this. Like if I don't see a swing low, I'm not interested in the stock until I see a swing low or a swing high confirmed. So, and I'm going to, on the chart, I could show you play by play, like I'm going to replay and show you how it works. So just bear with me. All this is going to come together. I know it's confusing if you're a beginner. You're not going to get it the first time. Second, third, fourth is going to take a lot of times. So just bear with it. This candle confirms this swing low. Now, why is this a swing low? Because this wick down here, this is called a wick of a candle, is lower than the one on this side and the one on this side. So that's a swing low. Your entry will always be the break of that second candle that confirms the swing low. So as you can see, I can't draw on this because it's not my chart. But whatever, let's just say this was a price of $10. Once it breaks the next candle, or whenever it comes and breaks this 110, that's when you enter. Now, it broke it on this one, right? And you would enter, and your stop loss, as long as it doesn't go below this, you stay in the trade. I kind of consolidated, but eventually it did its thing, right? Off of that swing low. You could use the swing high for the same thing, like if you play it to the downside. Again, I don't too much play the market to the downside. I'm not going to focus on both ways. I'm going to primarily focus on trading to the upside just because I don't want to confuse you guys, but everything would be opposite. Now, this is also why they're important, because if you're in a swing, let's say if you're in an uptrend, right? This is considered uptrend. You have a swing high, swing low, higher low, uptrend. Now, this swing low, do you see this right here? This CHOC means change of character. Once this is breached, you're no longer in an uptrend because you broke the latest swing low, which right here is where it broke. Now, you see how it made a swing low lower than this one? That uptrend is broke. So now this particular stock is probably about to start a downtrend. And that is why I say that the swing lows and swing highs are very important, because it's letting you know when the character changes of a stock or the structure is broken, right? So up here, you have a break of structure. Now, all that means is you're breaking the previous high, which is good because you can trade it up through the break of that, right? So if you're in this, you make the swing high, stock comes down, then you get in. If you're already getting in down here, you're targeting this, but you want it to break through that price too, because it's going to break the structure and it's going to keep making a higher high, right? So it comes down and it breaks the structure and it makes a new swing high, which is good for the uptrend. Now, the character of it'll change when you make when your next swing low is lower than the previous. You have now changed the character of the stock. It's no longer in an uptrend. It's going in a downtrend, right? So again, all that's going to make more sense. But that, I would say, if any of you are on here taking notes and really trying to learn, I will write this down. Swing low, change of character, break of structure. Again, you could go on YouTube and really get more detailed information on that. Learn those things. Very, very important. Okay. So now with me, so I kind of started this system, right? So I was like, when I decided to do this course, I'm like, I want to make it as simple as possible, but effective, right? So I came up with the 4S system, right? It's the sector, structure, setup, and strike. This is the system that I use to find my trades and to actually trade, right? So what I like to do first, I like to look at the sectors. For those that are new, there's, with the S&P 500, there's, I believe it's 11 sectors. You have like the financial sector, you have the consumer, discretionary, you have the energy, you have the real estate, you have the industrial. It's just different sectors. And within those sectors, it has stocks. So if you're talking about the financial sector, you're going to have your bank stocks, finances. If you're talking about consumer staples or discretionary, it's going to be like your Walmart, your Costco's, Amazon. Okay. If you're talking about energy, you're going to have like your oil stocks like Exxon, Chevron. Okay, you get the picture, right? So I like to look at the sectors. That's why if you were on here earlier, when I was kind of looking at a stock list, I went to this page and I looked at the sectors, right? And I'm also going to, I should have linked that app. There's an app called, I should have wrote that down. Let me see if I can find it on the laptop. I have it on my phone, but I'm using it SPDR. Let's see if it pops up. Sector. Okay, it doesn't pop up. Okay, we'll write it down. There's an app, it's called Sector SPDR. And it's gonna show you the sectors as well. I also have it on TradingView, and it'll also show you the stocks in that sector. I have like a stock in every sector that I like to trade. Not too much real estate though. I don't really do the real estate sector because I just don't like the way that it moves. What time is this? The market moving yet? Is that why I just seen that? Okay, so anyways, so on the part of the system, when I'm looking for my stocks to trade, I go to the sector first and I see what sector performed well for that day. So let's just say I'm looking for something for Monday. This is telling me how all these sectors closed on Friday. And consumer staples. Hold on. It's telling me my live is detected inactivity. Hold on. I'm going to do some verification. I'm just going slow. Okay. So on Friday, consumer staples did really well. And I know that in that sector, Walmart is in that sector. Oh, I didn't say nothing about Meta yet. I just had Meta pulled up already. And I was like, oh, is the market moving? It's like overnight market. I think it starts at 8, or did it start already? I thought I seen it moving, but I didn't really say nothing about it. So yeah, I know that with consumer staples, Walmart is in that sector. Okay. So let me put this back bigger. Okay. So you go to the sectors, you find where the money's flowing, whatever sector performed well. You can look on the time frames for the sector. Every sector has a symbol where it's the ETF, and you could look at the chart for that as well. And the purpose of that is to identify top performing sectors, example, tech or energy, right? Example, tech is leading. I'm looking for tickers in XLK. XLK is the tech sector. Okay, and I'll put a list of that too. You don't have to learn every ticker just because I'm saying it, so don't think you have to learn all the symbols, but that app has it on there for you. So that's the point of looking at the sector. You want to know where the money's flowing, look at the chart, identify that, okay, and then you want to find your stocks within that sector. Okay, so I suggest find you 1 to 2 stocks. Usually I wish I could pull that app up and show you guys. I don't know why I didn't think about that, because I'm on my phone. But it has a list of the top stock. Oh, you know what? I could pull it up on Robinhood, I think. Let me see. I can kind of show you guys on Robinhood briefly. So I put in XLK, that's the technology sector. Okay, so that's going to have, and it'll show you what are the top stocks in that sector. You have NVIDIA, Microsoft, Apple, Broadcom, Oracle. Okay, NVIDIA is the top. So I like to, pick the top ones of that sector, because those are the ones that are going to move it the most. Like NVIDIA makes up 14% of it. Microsoft makes up 12%, Apple 11%, etc. So these are going to be moving it the most, okay? NVIDIA, I like to pick the first one. So each sector, take that stock and kind of study it so that you know what stocks to trade when said sector is moving. So if tech is moving for the day, okay, I'm going to trade Nvidia. If consumer staples is trending for the day, okay, I'm going to trade Walmart. You know, just have your stocks from each sector. Now structure, that's the second part of the system. So I got my sector, I got my stock. Now I want to find the structure, okay, of that stock. Now when you're looking at the structure, you're going to define your market bias, okay? You need to know the structure, okay? Are we in an uptrend, downtrend, or consolidating? And that's going to be your bias. Okay, we're in an uptrend. I'm going to be trading it to the upside. For market structure, I like to find mine on the daily. Hold on, let me put this bigger. Zoom out. Okay, so for the structure, I like to find it on the daily chart. Okay, and that's going to determine the trend. Higher highs, higher lows equals bullish. Lower highs, lower lows equals bearish. Okay, daily structure shows higher lows. Your bias is long, meaning bullish. If you're going long, you're bullish. If you're going short, you're bearish. Those are other terms you should learn. People shorting the market means they're bearish. People who are going long on the market, they're bullish, upside. Okay? So, let me go to, let me give you an example of structure while we're on that one. Let me see. I'm just trying to pick one. I think they're all drew. I'm trying to find one that I have not drew on. Let me think. Let me see. Have I drew on this one? Okay. This is Adobe. I haven't drew anything, so I'm literally finding the structure live with you guys right now. So, hold on, because I'm analyzing. So if you look from here, right, we had this swing low right here at 330. We had this one at 331, and it's kind of in the same area. And then over here, if I mark this one, these are kind of in the same area. So this would be, to me, this would be going sideways. This would be a consolidating structure, right? I don't feel like it's in a good uptrend or downtrend. I think it's really consolidating. It's going from, so when I say I write too slow. Where can I get a copy of this? I said I'm gonna so the replay of this is gonna be posted on my YouTube channel. At the end, I posted on my YouTube channel, and I said I'm gonna get a link for my notes. That PDF, I'm gonna turn it into a link, and then I'll link it, like I'll do a video and link it or something where you guys can get it. So just follow my TikTok, and I'm gonna update everything at the end where you guys can find everything. What was I saying? Yeah, so this, remember I said with the market structure, there's only 3 options. You could be in an uptrend, you could be in a downtrend, or you could be trading sideways. Those are the only 3 structures the market has. So this is a sideways structure. Okay, it's going from here to here, here to here, 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 just up and down sideways, consolidating. So I do know that there's a strategy with options. I don't remember and I don't do it, but there's a strategy for stocks that are going sideways. I don't know if it's like what's it called? I can't remember. What do they call them? Like straddles or something? Spreads? Yeah, like spreads. Like a bull call spread or something like that. That is the strategy for consolidating structure. I don't trade it, never have. I can't tell you nothing about it, but I'm just telling y'all there is a way to trade sideways action if you want to learn that. But don't come to me for that. Okay, so now let me see if I can find the uptrend. This looks another sideways. Sometimes I could just look and see it sideways just because how close it is. This one I drew on this one. I want one where I have not drawn on it. Oh, God. I probably drew on all these stocks. What is this? Boeing. Let's see. Boeing. That looks sideways. Okay, this one. Yeah. Okay. So this one, not the best. I don't. It's okay. Now, when you're finding the structure, you're basically connecting swing highs and swing lows, right? Now, on TradingView, I have the indicator called the pivot highs and lows, and they automatically mark these for me, right? So to find the structure, I have on TradingView, there's a little tool. This one right here is called a parallel channel. I'm going to click that. And what I can do is I can go from here to a swing high that I see to the next one. See how I connected it? And you click it, and then I bring it down. And this is giving me an uptrend structure. All of this blue is an uptrend. You're making higher highs and higher lows. We haven't created one yet, but I don't know where they're going to automate it, if it's going to be here, but this also would have broke this one. So I don't know where they're going to create it, but it does appear to be like it's gotten broken. But this was an uptrend, right? And we're making higher lows, higher highs, higher lows. Now that's what I was talking about with the change of character and the break of structure. Now let's say, yeah, because this would be the swing low right here. I'm going to mark this. See this? Remember I told you guys the swing low is the candle in the middle is lower than the ones on the side. So this price of 139.23, this 139.23 would be a swing low. Now, you see this candle came down and closed below that red line. That means that it has changed the character. It has created a low lower than that. So it might be preparing to go into a downtrend. It ain't there yet, but it's probably preparing because it has broken this. And if it doesn't come back and reclaim this, it may be starting a downtrend. And matter of fact, I could show you guys on Walmart because like I said, I've been trading Walmart. I'm going to show you how the structure changed. Was it Walmart? No, it was Tesla. It was Tesla. Oh, it wasn't Tesla. What did I have? Hold on. Dang, why I thought it was... I thought it was Walmart. Tesla. Okay, I'm gonna come back to that. What stock were we on? Dang, I know I had a good example. I thought it was Tesla that the character changed. What stock were we just on, y'all? Was it this one? Damn. Can y'all tell my memory is like very short? What stock was we just on with that structure? I was on Annette. Yeah, Annette. Okay. We could try to find a change of structure on here. Let me see. Give me a minute to analyze. Yeah, we can find. Okay, we can find right here where it changed. Now, so I just showed y'all uptrend. Let me show you a downtrend on the same stock. Okay. Hold on. Okay. So you see back here, it looks like it was kind of in an uptrend. It was making these higher highs right here. Now you see how this swing high is lower than this one? It started to change and go into a downtrend. Now I'm gonna draw out the downtrend on this one. Okay, so all I'm doing is connecting the swing high to the swing low, coming down. That's a downtrend. You're making lower highs and lower lows. Now, I could show you where it kind of breaks. Let's see. Remember on the thing where I say you break the where you change the character because you break the latest swing high or low depending on what direction you're going. So okay, we're up, we're down, we're up, we're down, we're up. We're supposed to go back down, but it looks like, I don't know, it breaks out of this downtrend. And once it breaks out, you're like, okay, it might be trying to change. But the only way that is going to confirm that the downtrend is broken, it has to break and hold the last swing high, which is this 88.37. And I'm going to mark that. Once the price gets above that and closes above that, this downtrend is no longer valid. We could have came right here, right under it, and then came back down and made another low. We're still in that downtrend. But once this is broken and the stock closed above it, which is right here, there's no more downtrend. So what it did after that is it consolidated for a while. Wait, I didn't mean to draw this. I didn't mean to use this tool. Let me put the box. So after it broke the uptrend, oh man, hold on. Wait a minute. Okay, so it consolidated. I'm just showing you guys how it changed. So we go from this downtrend, we break the downtrend, and then we consolidate for a while. That kind of lets you know when it's consolidating, it's kind of, people could say the market is a little indecisive, or you could look at it as an accumulation phase, right? Where people are accumulating their position, usually the institution buyers, they're accumulating this stock, getting ready for the next move. So it's kind of just sideways, up and down, up and down. When it comes down here, they're adding to their positions, coming down, coming back down, they're adding, accumulating, going sideways, consolidating. Then it breaks out and it starts making this uptrend, right? So this is a perfect example because you have all three structures right here. You have the downtrend, you have the consolidation, and then you have an uptrend. Okay, usually when a stock breaks out of something, it's going to consolidate until it figures out what it wants to do next, right? So what it did was it started making an uptrend. And how we know that is because, again, in order for this uptrend to have started, you have to break out of this consolidation phase, which you have to get above this 99.47 and close above there. Okay, which we for you forgot your breakout. What do you mean? What do you mean I forgot the breakout? I said right here we broke it. What do you mean? For you forgot your break. Number 4. What for my my system? The 4S? Talk to me. I'm gonna look at the comments. What was I saying? Okay, so we broke out of this accumulation phase, meaning we had to break this 99.47 and close above that. And we did, let's see where if we want to be technical, 99.47. Okay. So right here, we closed above it, okay? But we kind of still consolidated a little bit, but then it started rolling, right? It started going up. No, you had 3 structures. I said you had 4. You forgot the breakout, but you mentioned it. No, structures, there's only 3 possible structures. The uptrend, downtrend, and the sideways. The only 3 structures. Now, the breakout is something that happens within structures. Those 3 structures, you can get a breakout of. You can get a breakout of an uptrend. You can get a breakout of a downtrend, a breakout of a consolidation phase. But it is 3 structures. So then the swing high started to be created, and that's how you know you're in a confirmed uptrend. Okay, so we had this up here, we came down, swing high down here, and down here. Okay, so those are the structures. And again, I'm gonna show you, it's gonna all make sense on the chart. When I get to the chart replays, all this will come together for y'all. So sector, structure, and then your setup. So after I find the sector that's moving and I get my stock out that sector, I'm looking at said stock on the daily and I'm finding the structure. Now, once I find the structure of said stock, I'm now looking for my setup. Okay, so you're gonna focus on waiting on your entry zone. Time frame, I put 1 hour because I do like find a lot of my setups on there, but you can find a setup on the daily, the 1 hour, the 4 hour, but I do find a lot of my setups on the 1 hour. Okay, so what you're looking for your setups, you're looking for patterns, breaks or retests, flags or supports or resistance. You're looking for something on your setup, right? For example, price retesting key level, volume is building. Okay, that could be like your setup. Now, I'm going to show you guys what I mean on a setup. Now, let me find a good one. Meta was good. Meta had some good setups. Meta. Let's go to Meta. Even though Meta's pissing me off. But Meta... Oh, God, Meta's pissing me off. Anyways. Okay. Let me see. Hold on, I'm going to show you what a setup would look like. I just need a good example. Look at Walmart. because this goes into like those hammer candles and stuff. I really should have had all these examples ready where I could just go straight to it. I didn't even think about that. Y'all bear with me. I'm new to this TikTok live stuff. Let me see. I'm trying to find one with those candles so that I'm trying to tie everything in for y'all. Just give me a second. Or at least a swing low. Yeah, okay. I'm sorry, I have a lot of markings on here. I really don't want to clear it, but hold on. Hold on, y'all. Oh, UNH might be a good one. UNH. Where is UNH? Because I know I had. I really want to find a. I'm sorry, y'all. I should have been. I'm just trying to find one that's going to tie everything in for y'all. Anyways, I'm going to just use Meta. Meta. No, I can't find it. Meta. Okay. So if I had a setup on Meta, let's say I'm looking, and I'm going to put it to where as if it's actually that day. So that where the bar replay comes in. We'll start it from there. Now I took off all of this ends October 7th. So I erased everything after the 7th. Let's just say I looked at Meta. Let's just say I looked at Meta on this day. Remember we were talking about these swing lows, why these are important. Okay, so we have the swing low. If I looked at Meta, I know, okay, we have a swing low that's created. We also have a hammer, and the strat is a little more advanced. I'm not going to even touch on that, but for those that know, you also have a failed 2-down candle. Do not, if you're a beginner, do not even try to pay attention to that and stress on that. That's a whole different thing. And I actually should just turn the strat off so y'all don't be confused by that. Because this is what a regular candle is going to look like. They're going to be red or green, and they're not going to have numbers. So I could see that there's a swing low right here. Now, remember I said your entry is always going to be the break of that second candle that confirms the swing low, right? So this could be your setup, right? For setup. Hold on. Go back. So for your setup, you're waiting for an entry zone. I said the 1 hour chart, that's the daily. You're spotting patterns, breaks, retest flags, support, or resistance, right? So with that swing low, that's telling me that buyers are getting exhausted, and this is going to kind of be like I just took a picture. It's going to be like a support level, right? I'm trying to see if there was one previously. No. So I can mark this like, okay, I'm about to find a setup. I know that that is where sellers were getting exhausted. As long as we don't go under that, we might be about to reverse this downtrend and go to an uptrend. So that's my setup right here. I have a setup. I have a hammer candle and I have a swing low. Now, the entry, if I say the entry is, I really should delete all this so y'all not confused, but I don't want to mess up my charting. I'm so sorry, y'all. Well, just pay attention to what I'm marking. Now, if my entry is going to be this 718.50, because that is where it confirms this swing low, I got to keep that in mind. 718.50 is my entry on this setup. Okay, so when you're finding your setup, there are so many setups that traders use. You have to find the one that works for you or the one that you like. I don't have too many setups. This is one of maybe of 3 setups that I like to use. So you could just focus on this one setup until you learn it, and then you can move to another one. You're looking for swing lows, right? So I see this, I'm like, Meta just made a swing low. I'm going to try to catch it. If it's planning to go the other way, I like this setup. This is on my watch list. I might trade this. I know that above 718.50, we can go up. And as long as we don't get below the 690, I should be able to stay in the trade. Now, after you find your setup, I might show y'all some more examples of different setups, but I don't want to confuse y'all. We're going to stay on that one for right now. Now, after you find your setup, then you want to find your strike, basically like where you get in, right? So you're going to execute. The focus is where you're going to execute with that conviction. And when I actually enter a trade, I like to do it on the 5-minute chart. Okay, so your setups are going to be on higher time frames, but when I actually enter during market hours, I'm on the 5-minute chart. And I'm going to show you guys that. So the purpose is to confirm volume and momentum and then enter. Okay, so you want to use your volume. Let me see. You want to use volume as your conviction on entering as well. Now I'm about to tie everything together. So we had the structure, find your stock. We had the sector, find your stock within there. You have your structure, find the structure. Then you find your setup and you find your strike. And I really should have just did it all on the one stock to really tie it together. I should have never started on A and G and went here, but yeah, hold on. Wait, I just moved my thing. Okay, this is where it's going to make sense. Friday, October 6th. Hold on. So I know where to go back to play this out. Let me see, because we broke on Thursday, October 9th. Okay. So 718.50 is the entry. We didn't really get it that next day, but we got it 2 days after that on Thursday, October 9th. So what I'm going to do is go down to the 5-minute chart. And I'm going to go to Thursday, October 9th to see what that looks like. And I'm going to change this to extended trading hours. Thursday, October, what did we say? October 9th? Thursday, October 9th. Let's see what that would have looked like if we traded this on the 9th. So we already found our entry, which is that green line. That's what this green line means. That was my entry when I found my setup. So above 718.50, that's where I'm going to enter the trade. So let's just say, had I played it on Thursday, what would I have done? Let me see. Because I don't know if I did or didn't trade this, but I'm trying to see what happened here. Okay. There's two ways that you could have entered this. Hold on, let me see. Hold on. Okay. Now I'm doing the bar replay. This is Thursday, but I'm going to cut all the Thursday off. Wait, what did I do? Did I lose the date? I'm sorry, y'all. I gotta go back. What did we say? 10-9? I don't know what just happened there. And I'm pretty sure there's a way that I could type in the date, huh? I just don't know how to do it. Okay. So we're back on October 9th. Bar replay. Start new one. Okay. Now, nothing. I deleted everything from that day. I'm going to show you guys step by step how I would have got in this trade if I was trading this. It's not the best. I think I have another example from Friday on Meta 2, and I'm going to show y'all different ways too. All right. Let me slow it down too, because this thing be going. All right, and I'm going to pair it anytime you're executing, which is the strike on the system, meaning you're executing, you're getting in. You have to pair that entry with the volume. Okay. Yes, I have 718 as that level. Just because we get over that, it doesn't always mean to enter. You want to look at the volume too and make sure it's all going together. So I'm going to play it step by step. We're on the 5-minute chart. So every candle represents 5 minutes of action. Okay. During trading hours, I like to be on the 5-minute chart. I might be looking on the daily or the 1 hour or the 4 hour to find my setup or market structure. But when the market opens, I'm on the 5-hour chart to get in. Okay. So I'm going to play it step by step. Okay. I'm going to stop it here. Because if I was trading this, me as a trader, and why I say these swing lows are important, these swing lows get created on every chart. It doesn't matter. Even on the 5-minute chart. If I seen this while I was trading, this swing low, I'm going to mark it because I'm already thinking meta from the daily chart. I should pull that up so I could go back and forth. That's what let me see. So I could go back and forth. That was the daily chart for let me cut this off. Okay, this is what we're working with. This was our setup, remember. Now I'm back in time on that day on the 5-minute chart. Now, I already know my setup. We had a swing low. Buyers were getting exhausted. My bias is that we're about to stop going down and we're going to make our way up. That is my bias, so I'm going long. I'm already just looking for an entry to get in to ride meta up. Even though my entry is this 718.76, 718.50, this green line. If I see this swing low, this could probably be an early entry, but you would have to be very careful, right? So since that swing low's created, This candle right here confirms that swing low. So even the break of that, you can get in. And as long as we don't go under that, the trade is good. All it is just a little earlier entry from our 718.50. Now, you would, if you got in early, you still have to watch this level because this is the original entry. And we have to make sure we're not going to reject or we're not going to act funny there, or we're just going to watch it. So let's just say I got in, we broke that candle, and look at the volume. The volume is very high. It's above average. This blue line represents the average of the volume. You want the volume to be above these blue lines. For those that have trading, if you see my video where I said to be prepared for this night, I told you guys to open a Robinhood account, a TradingView account, and Robinhood, TradingView, and Webull, right? So on TradingView, I have the volume indicator on there, and then I put the average. Okay, so once it broke with volume, let's just say I got in this trade, and now we can see how it played out after that, even when it got to our entry. Okay, so let's see. I'm gonna pause it right here. Wait, did I pause it? Yeah, okay. Break this down. Let's say I got in here. Okay, we got above our entry, and then we're kind of coming down. And then I see this, even though it's red and it's a lot of selling, it's still considered a hammer candle. Remember I told y'all, back to the candles that I like. I'm going to show you guys why this is important now. Let me see. See the hammer candle? Now, granted, these hammer candles, they're not going to always be perfect like that. But the gist of a hammer candle is it needs this long wick. And it needs to have like somebody up here. It could be red or it could be green. I mean, the green is better, but they do sometimes close red. But the fact of the matter on the hammer candle is that at some point, the sellers pushed it all the way down, but buyers came in and pushed it up. So that's the gist of the hammer candle. Yeah, you had all this selling, but it only thing that matters is how it closed. And buyers came in and pushed it all the way back up here. That's what this, like the wick means and stuff. So if you come back here, even though it's red and we're, oh, sorry, y'all. If you come back to this candle, even though it's red, sellers, and it closed red, like sellers won on this candle, but we can't ignore the fact that sellers bought it all the way down here and buyers came and pushed it back up here. So to me, yeah, it closed red, but buyers came in and did their thing. And guess where they did their thing at? At my entry. That is what I say when I mean the candles have to be, they only matter on key levels. You might have hammers all throughout your chart. All I'm talking about, those engulfing candles and the hammer candles at key levels. This is a hammer too. I didn't even realize that, but that would have been the better example, both of these. But look, you have this hammer and you have this hammer at a key level. And when I say key level, all that means is an important level. Remember, this was our setup. We have a swing low. Our entry is going to be at the break of the candle that confirmed the swing low, the high of that candle, which was 718.50. So here we are 2 days later on the 5-minute chart, and we have a break of that entry, and we come down and retest with a hammer. Those are actionable signals. But this was an earlier entry too because we had a swing low. But let's just say we didn't get in. We didn't even pay attention to the early entry. Let's say we just focused on where we said we were going to enter. So once it broke that level, you came down and retested it and it closed as a hammer, that is your sign to take your entry on your trade setup, right? You have the break. You always want to wait on a retest of almost anything, You're always going to get I'm not going to say always, but a lot of times you're going to get a retest, and that is the safer entry, like on the retest, right? Okay, so we break it. We have this hammer, and we also have another swing low. So the hammer confirms the swing low. So guess what? We are getting ready to take the entry because of this. Now, there's another way. You could have got in it after that and held tight, but I would have, if I'm marking it for visual purposes, but I could trade without marking it. I'm like, okay, we have this hammer. Now, I'm like, soon as we go up there, that's it. Now, let's see what it does. Okay, so do you see how we have our green line, which is our entry? You want to see some type of action there. We broke through our entry. We came down and we retested it and we closed as a hammer. I'm like, okay, now they try to trick you and they come down and close. So you shouldn't have entered just yet, but you should have been preparing to enter because we have the hammer candle. Then it has a red candle, but see, as soon as it broke the hammer, enter, and this is how the trade would have played out. Now I'm going to recap this trade too. I'm just trying to see where it ends because I don't really know where it ends. Now, let me pause that because I missed something too. You have to clearly on your trades, you have to have target prices. I should have went over that, which on Meta, like these blue lines from whenever I charted it, I have my targets. I had like 731, 743, like these blue lines. I'm sorry, I know you guys can't see. Right? So had I entered here, I am going for 730. That is my target. If we get past that, my next target would have been 743. Very important step that I missed. You have to have targets. And your targets are just past resistance. That's all it is. Past resistance levels. So if I got in here and my target was 730, I hit my target way back here, 729.23, and I should have been out the trade or at least just holding runners. Now, it'll never hit your exact levels, whether you're in, it's never going to be like exact, but if you get in the ballpark of it, you're fine. So if my target is 731 and we hit 729, that's a fair trade. Now, eventually, yeah, it did break that too. So if I wanted to hold on, all I'm saying is if you're a beginner, you need to learn how not to be greedy. Okay. Don't always just expect it to go exactly to that, because there's a lot of times in the beginning of my trading journey where I'm just steadfast stuck on 731, and it might go like 50 cents below, but I'm like, oh, we're going to get it. And then it just might whipsaw and drop. So once you get in that ballpark of your entry, take your profits. Like, don't be greedy. Okay. Or at least with options, lock in your profit and maybe hold a runner to see if it'll break through that. Right. So we had our entry down here. We hit our target, but then the trade kept going, and I'm going to show you. I don't know what it does next, but once you hit if you want to know when to stay in a trade, again, you come to the 731 and you look at it. How did it perform when it got there? Okay, we have nice solid candle right here where it came through and closed. There's no wicks, meaning nice buying pressure. The volume was pretty good. It's right above the average. Okay, we might break through it and hold it because the behavior is pretty good. So we break through it, we come down and we retest it, and we have another hammer candle. Volume not that great, but okay. This is where you decide, do you want to close all your profits or do you want to try to stay in to see if it's going to keep going higher? You have to evaluate the stock's behavior at every level that you mark. Now let's see what happened, because I don't know what happens. Okay, so that's the end of the day. So after we have this hammer candle, I'm like, okay, we kind of go. And then if I was still in the trade, now this is towards the end of the day, if I was still in the trade and I seen this and I seen all this buying pressure, I'm going to swing it to the next day. That's a different story, though, if you want to swing and all this stuff. But this could have been a very good day trade, right? So, again, you find your sector, find the stock, go to that stock's daily chart, find the structure, okay? Then you're going to go down, find your setup on, it may be the 1 hour, 4 hour, whatever. Find your setup, mark your entry and all that. And then you're going to execute on the 5-minute chart when the market's open. So that was a successful trade. Now, I had an example that I wanted to show on Meta on Friday. Let me see what happened and why I had that marked. Someone said that was good. Thank you. Because I be trying to, like, explain the best that I could. I'm like, man, because when I was learning, it's like, huh? But I'm telling you, it's not going to all click anyways the first day. But if you go and just zone in what I'm telling you, like sector, structure, setup, strike, it'll start making sense the more you're doing it. You're doing so good because I was trying with entries. Me too. And I'm telling you, the entries is really what makes or break your trade. And I had to learn that. Once I nailed my entries, it did not, even if the stock didn't go my way, if my entry was good, my loss was small. So your entry really matters. It matters on your winning and your losing. As long as you have a decent entry, you can minimize your loss and you can maximize your profit. Because if you get in at the wrong spot and let me see why I had Meta Friday as an example. Let me get out of this. I don't know why I had it marked, but we about to see. Friday. Let me go to Friday's 5-minute chart. I have another entry to show y'all. Let me see. Why did I have this marked? Let's see. Let me delete this. Maybe I had a... okay, maybe it was this hammer. All right. Now, my indicators, I'm going to go over that at the end too, but I just had to put that indicator on there to see. Someone said, can you explain again? I'm about to explain another entry on Meta from last Friday. Trying to see how I would explain the setup because we're... Now, let me see something. This is Friday. Hold on, I'm trying to pair it with a setup. Well, Friday was the 17th. 17th starts here. Let's see. So 7/12. I don't know. 7/12. Well, yeah. Hold on, I'm trying to think what the setup would have been on here. What is this low? I'm like reverse engineering, so I have to find everything. Hold on. 7:03. Okay, so 7:03. What's the 4 hour? The 17th. This is the 17th. This is the 16th, this is the 16th, this is the 17th. Okay, so let's see if this works. So we're talking about Friday, last Friday. Now let's just say I looked at Meta on Thursday before Friday even started. So that means those candles don't exist. Let's just say I happen to look at Meta last Thursday. Okay, I already have my, like, once you start marking your chart, you don't really want to take nothing off because everything like the history like kind of repeats itself. So I'm like, okay, well, I know I have a market structure up here. We fell out of it. It might try to come back in this structure. Okay. And I'm going to show you if we have this low right here. This is the 1 hour chart. We have a swing low right there. And this candle confirms the swing low. So my entry would be about 7:10:54-ish. Okay. But we have actually, because that will have already passed. So let's say we have the entry and we're like, okay, well, Meta already hit the entry for this swing low. So let's just see what it does on Friday around these levels. This is if I were to look at Meta. This is exactly what I'd be doing. I'm like, well, the entry was 7:10:54. We closed above it. So let's just see what Meta does on that Friday. Let me take this off right quick. Okay, so remember 7:10:54 was our level, but we don't know what's going on here. So we're going to start. Nothing's happening. Market bell has rung and the stock market is open. And I'm going to try to find an entry on Meta. Let's go. So I'm going to let it play out. I'm looking. I'm like, okay, there's that 710 area again. Okay. Let me see. Okay. Let me stop here and analyze this because we have this swing low, 706 that was created, right? Now, we come and we break our 7:10:54 entry again. Now, remember, it had already closed above that, but somehow in the pre-market, it's under that. Market opens. We get above it. We come down to kind of retest, and it closes under, and it's rejecting. So you're not quite wanting to get in because it's not really certain. Someone said, look at Tesla or QQQ. Okay, I will after this. Yeah, we broke it and it comes down on the retest. It doesn't hold and then it's rejecting. So you don't want to get in yet because it's not. That's why I say you have to learn the candle behavior. Because you're like, it's kind of rejecting. I'm not sure. But the volume's good, but I still don't like that wick. So then I'm looking, and then we break through it right here. And we have good volume. We don't have no wicks. It's a solid candle. It's, oh, shit. Wait a minute. Sorry. It's a solid candle. I like that. I'm like, okay, now let me see. I still want it to come down and retest. So come down, and here's a retest. Not the best with all these wicks, but it held, right? Now, you can enter at the break of this candle that confirms. There's not, see, when we come to the level where I say you want the actionable signals, I look for a hammer or like an engulfing candle at my levels. That's not a hammer or an engulfing. And it's really a, I don't know, it looks like a doji. I don't know, is that a doji where it's in the middle? But anyways, so I don't really like that as an actionable signal. But, I mean, the volume is good and it's holding. But it's not, it doesn't have a high conviction for me. I may or may not have skipped that intro. I might have been like, no, let me watch a little more. Or if I did enter, I would have a very tight stop on that. Like if I entered here on the candle that confirms it, like if we go below, I'm probably like my stop loss is tight. I'll just put it like that. So as you can see, after that, it kind of goes up. It hits 7:15. I mean, 7:10 to 7:15 on a Friday. If you're doing 0-day expiration, that would have been a nice trade. Not the best, but you would have made you a couple dollars, right? But we reject this 7:15 and we come down. And let me see what happens next. Now, if I was in this trade and didn't get out up here, my stop loss is tight. Once we got down here and start acting funny, I would have got out. But let me see what happens next. Okay. This, I wonder if, see, this is a hammer candle. Now, I would have had to pair that with, because I think that's why I had this example. Let me see. The 8 isn't on there. It's not the 8. Let me close that. How would I have played that? That is another swing low. I like the volume and it's a hammer. It's not necessarily at a key level because I don't have anything marked. I do have a swing low down here. Let me see if it touches that. 706.11. Not really, because if you go under that, it's probably going to go down. So if you're a little more advanced, when there's not necessarily a key level that it's hitting, but you're in the ballpark of one, like this low is 706.72. It's not too far from the 706.71, right? It didn't touch it, but it's not far from it. So you can interpret this candle, this hammer candle, an actionable signal, as buyers really stepped in right here. Like they're trying to buy this dip. Like when it comes to this support, they're going to buy it up right there. As long as we don't fall under that, it's not going to like go down. You have to breach this to go down. So you could look at it as buyers waiting for it to come down to this area and enter, because we have a hammer and the volume was very high on that candle. So I could look at that too and be like, okay, we got another hammer. The volume is good. It's like they buying it up right there. So this is the candle that confirms it. Let me delete this because now we're not, well, no, I'm gonna keep that. This is just, I know I have a lot of green lines, but I'm giving you different options. So once I mark a new green line, don't necessarily pay attention to these ones. Just pay attention to the one I just marked. Okay, so I'm like, okay, hammer candle, volume's good. Let me mark that. My stop loss. Well, we already have this swing low right here, 706.11. So I don't need to mark that. So again, your entry on a swing low is going to be that second candle that confirms the swing low. So 709.58, I'll mark that like, okay, let me see. It kind of plays in that area. It's like rejecting, not really. And then on this candle, it breaks through it. Boom, in there. Now, say you got in down here, and now originally we had 710.54 as our entry from the setup. That was the original. But you can still kind of adjust if you're looking at the market, if you know how to read the candles. Okay, so let me see what happens after that. I'm gonna pause it there. So do you see how even if we didn't get this little earlier entry, even if we still wanted to wait on our 1054 entry, you have this candle that breaks through it. A very nice candle, very good volume. Even better than, remember over here when I'm like, yeah, we broke it, but I don't really like, it's kind of iffy. This is way stronger than this candle right there. Okay, nice solid, no wicks. Volume is above the average. I'm like, okay, I've hit my original entry. Now let me see how it does on the retest, because when we come through here, we come down on the retest. I didn't really like this candle, which kind of shows you why it didn't go too much further after that. It just kind of goes up of like $5 and then comes back down. This one, okay, well, we broke it. Let me see if it retests this time, and let me see what that retest looks like. So we kind of come down, and right here we retest it. I like this candle. The volume's not that great, but it's a nice candle. I'm like, okay, watching, and we come down again, and we're in there, we're holding it. So once we tap it twice, I'm like, okay, it's support. At least it's holding my entry. So I would be safe to get in because it's holding that entry. And now, not only did it hold the entry, this candle right here is actually an engulfing candle too. Remember I said my two candles that I like are the hammers, I like the hammer candles and engulfing. An engulfing candle means the candle is engulfing this one. So this one is bigger than this one. Like it's like Pac-Man eating it. Like this is bigger than all of this. This candle is engulfing this candle. Okay. We have that. Hold on. We have that here at our key level. This is an engulfing candle at our key level, which is our entry. It's engulfing this candle. The volume's not great, but I know that it's holding my key level as support because it came down here, buyer stepped in, it came down again, and then we had an engulfing candle. I know that it is holding that level. So you could have took the entry at the break of the engulfing candle. You just watch it like, oh, okay, well, let me see. Boom. Soon as it gets over there, now you're in the trade. So you have this, and let's see what happens next. And then you have this hammer candle too. I'm wondering, this is a good hammer because, wait, no. This has all that volume. Which one had the volume? Okay, yeah, so if you got in at the break, which would have been around this candle, you see all the volume, that would confirm it too. But let me see how this plays out because I don't know. Okay, that's the end of the day. This blue is the end of the day. So from here at our 710 entry, and we kind of got in, I mean, you can make it 712, whatever, but it's in that ballpark. It comes and it breaks the 715, and it did better than back here because we couldn't even really break the 715. And we broke it back here with this candle, and we had good volume. So overall, even though we could have had good entries here and there, your better entry, like your best, would have been around here at your key level where it held. And then it started making its way and it broke through this one. And then, I don't know, maybe tomorrow, because this was Friday's candle, we're going to see how, I don't know, for whoever, if they would have traded Meta on Friday, like swung it. If it opens green on Monday, they might have made some money. But that is the entry. That's how you execute your strike. I had an example on IWM. I'm going to show you guys something too. Let me put I do lives every Sunday, 8 p.m. But this was just one time. No, I don't know if it'll be one time, but it was a dedicated to beginners. Usually we just go over our watch list. So IWM, and I'm gonna show you guys contracts and where the money gets made too. So that's coming too. What did I have on IWM? Fridays, break and retest Friday. What were we on Friday? I need to get out of this. Exit. What did I have this down for? Okay, so Friday. Okay, IWM is an ETF that I like to trade. I know somebody was on here talking about SPX and SPY. I stopped trading SPY a long time ago. I like IWM. The price action is more cleaner to me. Okay. So on IWM, I've already had my market structure marked on this for the longest. I've been trading in and out of this trend since it started way down here. Well, I've just been up and down, up and down, up and down, up and down, following the market structure. The trend is your friend. And I'm going to show you guys. So if I seen this on Friday, or excuse me, Thursday, okay, this Thursday's candle, and then this was Friday's candle. What I know is that IWM typically bounces when it gets to the bottom of this trend. Bounce, follow the trend, okay? So I'm like, if I seen it Thursday, I'm like, well, we're close to our trend. Let me see what happens. So here we are, Friday, right? Hold on. Now I'm on the 5-minute chart. And this is actually an example if you would have maybe wanted to trade it to the downside. Let me see. Okay, so I seen Thursday. I'm like, oh, we're at the bottom of the trend. I want to see how it's going to react. I don't know what's going to happen on Friday, but I'll show you guys how I would have played it or what I would have looked at. Okay, so market opens, boom. I'm gonna stop, but wait, I'm gonna keep going because I know there was another one. Okay. All right. Now, for whatever reason, I've already had the 244.98 marked as some type of resistance level. For whatever reason, I don't know why I charted it. I'm not on the higher time frame, but you got to know where your support and resistance is. 244.98 is a resistance. So the market opens and I'm like, okay, we come and we reject. Now this is the bottom of that trend. Even though this is the higher time frame, I just went lower and it's the same thing. I'm like, okay, so we keep rejecting our resistance, but we're bouncing off of our support, rejecting. I'm like, okay, so one is going to break or make. We're either going to break through this or we're going to breach our support. Now let's see. And let me see how this plays out. Okay. So we come down, we breach our support line right here on this candle, and the selling pressure is kind of high. But remember, every time you break something, it always most likely comes to retest that level. So like I said, I don't like to play the market to the downside, but this is a short play right here. So we break our support and then we come down and we try to retest it and it rejects again. So now if I like to play the market to the downside, I'm like, okay, we come retest. I know I have this low right here. As soon as we break that, I know I probably could enter. Or if we break this retest low, if you want to kind of get in early, don't try to cheat the market. But if you want to try to cheat the market, that's a good entry too. As long as we don't get above this, you're good to stay to the downside. This is a put option if you're shorting the market, right? So we come down, still come up and reject. Boom. Soon as we break that in the trade, let me see how it plays out. Now, not a lot of movement to the downside, but for IWM, if you know how to trade it and you're doing 0-day expirations, from about 242 to the low of, what is this? 241.48. That's what, a little over $1 move. You would have made money. But that's why I don't like to play the downside. It's too short of a time. Like you're in, boom, and then get out. If you like to play it that way, yeah, sure, you can make money. But that's why I don't like to play the downside, because it don't go in your direction for long unless like whatever, something's happening and the stock is just falling. But then it turns around and it reclaims that, and then we're back up here. And I don't know how this plays out. We came back and rejected that again. So even if you know that it keeps rejecting, you could have got in again and played the short down. Okay, so this is me just showing you an example of these key levels. Anything that you mark is a key level. This trend market structure, the bottom of it and the top of it are key levels, and the regression line are key levels for me. Those are the supports and resistance. Okay, you have to come and see how it reacts at your key levels, whatever your key level is. Okay. I'm showing one more example, and then I'm gonna go to how to pick the contracts. So I really just was trying to make this 2 hours. What did I have for Walmart? Tuesday 1014 swing low. Tuesday 1014 swing low. Tuesday 1014. 5-minute chart, Tuesday. Okay. I don't remember why I had. Okay. So Tuesday. Hold on, y'all. I'm trying to see why I had this Tuesday. All right. So this swing low back here, your entry would have been here. I'm trying to see why I have it marked. Let me go on the 5-minute and see what I had. Tuesday, the 14th. Monday, this is Tuesday. Let's see what happened on Tuesday. I gotta do better with my notes. I had it marked to show y'all. I don't even know why. Let me see what happened here. We had our entry at 103.25. Let me see, 103.25. So why was this the entry? 103.25. The setup must have been somewhere. Okay. Okay. I think I see why I had this. Okay. Walmart. We've been in this market structure. I had this market structure for whatever reason. Now, this is the 4 hour. Our setup. So back on, this was back on the 7th, right? So we have this swing low created, and this confirms it. And at that point, my entry was going to be 103.25. Mind you, I don't know what's going to happen after that. All I know is on October 7th, Tuesday, October 7th, I seen this setup. Okay, I know we have this market structure. We're probably going to break through it and start an uptrend. Even though we're in this downtrend, once you break it, it's probably going to start a new trend. So you can always anticipate playing the breakout of something, right? So, and usually they'll tell you like 3 touches and then it might break out. So you have a tap, 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 and then eventually the stock wants to break through this and it wants to just run away from the downtrend, right? So I see this setup. I'm like, okay, we have our swing low. This confirms it. My entry is going to be 103.24. Sometimes, and this is why I'm showing this example, sometimes it might take a few days for your entry to trigger. Just because I found this on Tuesday, it doesn't mean that I'm going to enter on Wednesday. It might be a week later. You just have to wait. And this is an example. Because if you see, let me take this off. Because if you see, we don't ever even hit our entry till Tuesday, like a week later. So we never even broke through that. We kind of broke here, but that was not solid to enter because we ended up way back down here. So we don't even hit our trigger till a week later. That's why you got to be patient. You don't know when it's going to come, and I'm going to show you when it came. So here we are, Tuesday. I have my level marked. My entry was this the green line, 103.25. That was the entry. We're on the 5-minute chart, and I'll show you guys how I would have entered. Okay, so boom. We don't know what's going on. Market just open, but I have my levels marked. I have my entry. This is probably represents like maybe a stop or an old resistance. I don't know why I marked it, but I know any level that I mark, I'm watching it for a reason. Now, my blue lines, when I charted my entry, my blue lines are my targets. This is what I'm trying to hit. So I'm trying to hit 103.94, 104.71, and 106. Now, market just opened. Let's see what happens. Okay. 510, that. Yeah, I probably would have entered there 10 minutes. I wonder if the 2 minute. Sometimes I enter on the 2 minute, but let me see what this look like. Let me see. I mean, it's a swing low. 2 minute. Let's just say I was on the 2 minute with Walmart. Once I seen this swing low created on the 2 minute, as soon as we break that, that's where we would get in. Like this line right here. If I was on the 2 minute, I'm like, okay, we created a swing low right around my entry. All right, so as soon as we break this candle, I'm going to get in, which we broke it on the next one. It didn't hold above it, but it broke it. But I'm in the trade at this point, and my stop loss, as long as we don't go below this swing low, the trade should be good. So I'm in about here, and boom, I'm just having all this consolidating. But then it eventually goes up. But I'm going to go back to the 5 minute chart. If I was on the 5 minute, we create this swing low right around my entry level. Volume is good. This is the candle that confirms it. Okay. Soon as we break this, I'm getting in. We break it on this candle, I'm in. As long as we stay above this low, there's nothing to be worried about, and we'll see how it plays out. Okay, that's the end of the day. Now, what I got in, back here? Look at that. Now, I hit what? I got in back here. We hit the first target. We hit the second target. We hit the third target. And even more. Okay? And let's see if I would have. Do you see how my target, the second target, 104.71? Do you see how when it went through it, all this volume came along with it? So even though I hit that target, I wouldn't have got out because I'm like, dang, buyers is very interested. I know the stock is going to go up more. I'm not going to get out because I hit my target. I might secure some profit, but I'm not going to get out the trade. I'm still going to have contracts because buyers just told you right here, we in there. We in there. So what does it do? It kind of consolidates for a little bit. Boom, takes off to the next price. See, when we break through here, you got to look at the volume. See, we kind of rejected here, but we're getting in there. But look at the volume. Buyers are very interested. So it's like no reason to get out. You just got to look at your volume. If the volume was weaker, then yeah, you probably be done with the trade. Okay, see, we broke through there. Look at the volume. Volume was just really good on this day. Then we came down and we did a little double tap test of this target. And look, buyers still just interested. There's no reason to get out. That was a perfect trade. And you went all on the system. Now, I'm pretty sure on that day, because I've been trading Walmart and consumer staple has been doing good, I'm pretty sure that sector was up. Walmart is a trade that is a stock I like to trade. So we had the sector, we had the setup, gave y'all the setup back here, like as if we didn't know what was going to happen, but it was way back there. That was the setup. And then your strike is your entry. And this entry didn't happen until a week later. So just be mindful that your setup doesn't always have to come right away. You just got to sit and wait. Now, mind you, somebody that's not patient, imagine they have Walmart. They marked Walmart last Thursday, but they're just not patient enough to sit and keep watching Walmart for that entry. That's the purpose why they be doing that, why they wait a while. Like, they want you to forget before they make that move. Like, the market makers don't want everybody to make money. They know that we're impatient. They know that people have seen this setup and they're waiting to get in. They know this. Okay, they might play with you and give it to you 7 days later. They want to know, okay, well, who's still paying attention 7 days later? Okay. The site that I use to find the sectors is called Sector SPDR. It's an app that you can download. If you use, does anyone on here that trades use Thinkorswim? I'm going to do a video for that. I don't want to derail, but I'll do a video how you set your sectors on Thinkorswim. I'll do a video. Let me get to the contracts because, like I said, we still on beginners. Show you guys how you make actual money. Let's just go to Walmart since we were on Walmart. And I'm going to show you, if you're a beginner, if you want to just practice without losing money, this is how you do that. So let's just say you're practicing, you found your setup. You're like, okay, well, Walmart's going to break this. So remember when I say you buy the contract, you're anticipating a stock to go a certain way. So if I find this setup, I'm like, okay, we have a swing low. If Walmart breaks 103, we about to go up. Now, I could go off my past resistance, like 106. I could be like, okay, maybe it's going to hit 106 or whatever, but I know it's going to go up. So now on my contract, the market's open after hours right now. That's why this is moving. So don't wait. No, what time is it? Yeah, it should be moving after hours. Anyways, Walmart trade options. Okay, Walmart at the time of this was, it closed at 103. I always will suggest, we're not there because 103 passed. This was in the past, but just imagine this was 103 at the time. I always suggest getting the at the money strikes. Okay, so at the money strike prices are going to be right above the actual price. So right now, Walmart is like 108. Well, that will be in the money. Well, we got to get above it. That's like at the money. And then in the money is under it. I always suggest like the first couple ones at the money, right? Now, imagine this was 103. Okay, I might give myself say like, I always say like at least 30 days, okay, on your expiration. Doesn't always work like that, but I do always say like at least 30 days. Now, why these ain't popping up? Let me see. I'm gonna go to 26 days. Okay, whatever. Imagine at the time it was 103. So I'm gonna buy the 103 contract. And I have 26 days until it expires. So I'm anticipating, remember the resistance was like 106. So I know that I have a bias that Walmart's going up. I know resistance at 106. So I'm like, I'm betting it's going to go up towards 106. I'm going to get the 103 strike because that's going to give me the right, not obligation, but the right to buy 100 shares on Walmart at 103 within 26 days. Why that's beneficial? Because in 26 days or even before 26 days, if Walmart goes up to 112, I can buy 100 shares at 103 if I choose to exercise the contract. I've never have. I don't ever plan on it. Unless I have a lot of money, I would do something like that. But that, I ain't got no hundreds and thousands of dollars. So don't worry about exercising your contract. Don't pay attention to that. But that is what you can do. Now, okay, so I'm going to get the 103 contract. If you don't want to lose your money, you just want to practice, you can click on it and hold on, where is it at? It's going to look different on the phone too. If you click on it, you can add it to watch list. Okay? This is how you can practice. If you found your setup, you're going to get in. You will be buying this contract, but add it to your watch list. And what that's going to do is going to show you how much money you would make as the stock is moving. It'll be on your watch list, and every day you'll see, where is it? Hold on, I don't ever use the computer, but click on that contract that's on your watch list. And it's going to show you what you would be making if you were actually trading this. It's not moving right now because the market's not open. But you'll see what you'll actually be making and when you can get out. Now, I'm going to show you guys right now what you could be making too. Let me see. Now, remember I said you add... If you add your premium is how much you paid for it, right? If you add that to the strike, what was the strike? We were pretending it's 103, but I can't keep up with my lies. So we're just going to go at 108 because it say 108. But remember, we're going off that setup. Okay, so just use your imagination. So remember I said the break-even price would be 110.84 because you're adding 284, which is the how much you paid, to your strike of 108, and it gives you 110.84. So that means at expiration, hold on, let me back up some. Can y'all see the whole screen? That means I'm just showing you guys what the break-even price is. You don't want to break even. You want to make money. But at the break-even, at the end of expiration, what did it say? 110.84? 110. I think it was 110.84. Wait. Wait. Why it won't? Okay, maybe I gotta drag it. Hold on, y'all. Why the price don't move? Hold on, 110.84. See, now I gotta try to get it on 110.84. I should be able to type 110.84. Enter. Oh my God. Anyways, if I could get it on 110.84. Wait. I'm all the way on. Hold on, y'all, because I don't know how to use this damn thing. 110. Anyways, if I get it on 110.84 on the expiration date, it's going to be break even and you didn't make no money. That's what I'm trying to show you, what that break even price means. 110. See, I'm almost at 184. Okay, I would break even at 110.84, but you don't want to break even. You want to make money. So now I'm going to show you how you make money. Simulate my returns. Let's say Monday when the stock market opens, let's just say right there, and Walmart is at 110. You made $108. Okay, as long as it keeps going up from 103, you making money, right? What is going to kill you is that theta. Remember them Greeks that I was talking about, where I say you need to have an understanding of them, but I swear you don't have to be like, the theta is the time decay. That's what's going to kill you on the time. Your stock could be going up, but as time goes on, you're going to be losing money. You see, I still have the price at 110 if it was 110. But although we're up, but the time, this is the arrow that I'm moving is the days. We're going closer and closer to our expiration, and you're losing money. Okay? So the idea is you want it to go up as soon as possible. Now, you don't control the stock and what it's going to do. You just want it to do that. It's going to do what it want to do. But you want it to kind of go as soon as possible. So this is like 2 days later. And now let's go down. Even if we go up to if the stock goes up to 112, you made $256. And you've paid, how much did we pay for this contract? We paid $284. Okay, remember I said every contract represents 100. You just move the decimal 2 places to the right. You paid $284 for this contract. So you're going to make money as long as it goes up in a timely manner. Now, we could go to, you don't have to hold it all the days. You have 26 days to make money. Okay? You don't have to hold it the whole 26 days. On the 5th day, if you up $562, sell it. There's no point in holding it 26 days. You done made like double your money. Now, if you have multiple contracts, like 5 or something, whatever, 2, 3, you could sell 2 and hold 1 if you want to kind of see what's going to happen. But I don't practice being greedy, and I don't teach being greedy. I'm going to always tell you, sell when you do you only buy contracts for? I have a strat. So it depends. It depends what the setup is and what's going on. The only time that I buy far out, matter of fact, we're talking about DraftKings. We've been talking about DraftKings. One of my viewers showed us a setup. I can't really remember, but we were at a very good support, and DraftKings had dropped a lot. Let me just show you. I'm going to show you when I would get out the contract prices. So we've been talking about DraftKings all the way back here. Because we had a swing low here and it came down, and we're like, it's a double bottom. And then we know we have all this to cover. Like if we're at this support down here at about $35, we're going to try to go up to $44. That is a time that I would kind of buy out the money, but I still need a lot of time, only because I know it could clear it. Like it's going to try to clear all of this to $44. So I would go out the contract on that, but I would still have a lot of time. For the most part, when I'm buying my contracts, I like to buy them at the money. Let me go back. Sorry, I don't never use Robinhood on the computer. So weird. I'm gonna go to DraftKings right now. Okay, now my computer's going all slow. Wait, how did I get on the... Okay, so we know resistance is up here at 44. We see we at support, key level. And then we're going to try to ride it to resistance. We were talking about DraftKings a leap on that all the way out to till next year. We was like, I think some of us was talking about January of 2026. But let's just say I take the January 27th. That's what, a year and a half? Like 26, a year and a couple months. 453 days. There you go right there. Okay. I would go, if I had this much time, I would go out the money to that 45-ish area where there was resistance. That's when I go out the money on something like that. Or you could still go in the money. And this is even better because you're already right here and you're anticipating like a $10 move. Why not start where it's about to go in the money? And then you just like almost, I'm not going to say guaranteed make money, but your probability is way higher to make money when you come down here instead of going out the money. And I'm going to show you even on the January one, the volume of it. Like, see how all these people are already in it? Like 17,000, 21,000 contracts are already being traded, or people are already holding these, okay? So that's when I would go out the money. So anyways, let me do a brief recap. Like I said, you're not going to understand it all in one. But if you want to start learning, these are the things that I will focus on. This is a system that has been working for me. And as you trade, you're going to come up with your own when you see what works for you. But I have taken all of this from spaces that I've been in. And I like to look at the sector. That's always going to be your first step. Look at the sector. See what sector performed well. Find your stock in that sector. Okay. Go to said stock in said sector. Find the market structure. If you don't see a clear market structure, or if you don't want to trade a downtrend, or if you don't want it to be consolidated, move on to the next stock. Find a different stock. Get you a nice clear structure going on so you can create a bias. Okay. Then you find your setup, and then your strike, which is your entry. That's when you strike your trade. Learn the swing lows, actionable signals. I like hammer and engulfing. And I want to show, let me see something. If I were just to look now to see. Okay, it's funny that I just landed on this. Okay, Duke Energy. This is something I've been trading for a couple weeks now. I had found my market structure a while ago. We were in this downtrend. Again, when you find your structure, yes, you're in a downtrend, but eventually those structures break. And those are called breakouts. And people like to play breakouts. So we have this downtrend structure. It taps 1, 2, 3. Think of it like, I don't know, like a glass ceiling. Eventually it's gonna, if you keep hitting it, eventually it'll break. My YouTube is Wine and Wall Street. Wine and Wall Street. Eventually, like, think of it as a glass ceiling. Eventually it will break. But you can play it as long as it's valid. So you can play it, follow the trend. You might short it down here, but then when it comes down here, you're going to go long. It comes in, you're going to play it back down. You're going to go up. But eventually it will break, and a lot of people want to be in on the breakout. Okay, so we broke out there, and we have been going up. The reason why I came to this is because this is me freshly finding a setup on Duke Energy right now if I wanted to trade this week. Because I had all these resistance marked already, look at what I have right here. What have we been talking about? Hammer candles at key levels. I had a resistance at 127.84, and that was actually the all-time high that it just broke recently. But when I was marking it, I didn't know if we were going to get there. I started trading this like back here because I caught the breakout. So none of this was here. But I had my structure and I had my levels, and I knew this was all-time high. Right now, currently, on Friday, this has closed as a hammer candle on a key level, and look at the volume. This is the daily. So I'm still on my market structure, but what we did was we broke out of this downtrend and we're about to form. This is the new market structure. And I'm about to draw it. This is all in real time. We don't have no swing lows or highs created. Well, actually, let me see. Let me see where the latest one. Okay. See how this swing high was 124.30 right here, 124.30, and I have that blue line. See, we broke it and we closed above it. We have now changed the character because we breached that swing high. The character is changed, and now we're going in an uptrend. Now, although we don't have no swing highs created, I can still draw my market structure from here to here. We're starting a new uptrend. This is now the market structure. Okay, we were in a downtrend. We have broken that trend. The trend is broken. That structure is no more valid. We are now in an uptrend market structure. So your bias that you created for Duke Energy is long. Your bias is you're bullish because it's in an uptrend. That is your bias. Okay, we found the structure. We're biased on going long. I have a hammer candle right here on a key level. This is just on the daily. This could be my setup. I'm like, and we're at the bottom of the trend. So what do you think is going to happen? You have a bias to the upside. Okay, well, if it hits here, comes down here. If it hits here, comes down, hits here, comes down. What is it going to do next? Come back up. So now you're anticipating a move back to the upside. Now, I'm going to be watching this next week. I've been already trading it, but now I think we might be able to trade it again. I've been in and out of this stock for a couple weeks now, and I think it's ready for another trade. Volume's good. Hammer candle at a key level. Same thing. The 4 hour. This could be your actual, you could have found your structure on the daily. We found our structure. You could go down to the 4 hour, and this could be your setup. You have a swing low right here. Remember, I told y'all study the swing lows, because swing lows indicate sellers are exhausted and the stock might be making its way up. Doesn't that make sense? If the trend, if you follow the trend is your friend, up and down, up and down. If we're at the bottom and I say there's a swing low created, and I say those are important because it signals that sellers are exhausted, we're at the bottom of the trend. They have been, from here, they have been selling. Boom. Swing low confirmed. Sellers are exhausted. Buyers are stepping in. See how that works? All at my key levels. I'm on the bottom of the trend. That's a key level. I had resistance at 127, which was the all-time high. We broke that. We came down to retest it. All these are confluences. I don't think I didn't get that far on my notes. That was the last thing. Confluences. Confluences, they refer to a situation where multiple independent factors or signals point to the same outcome, making a trade ideal stronger and more reliable. I like to have 2 to 3 confluences on every trade before I get in. My first confluence. Okay, I found my structure, and there's a hammer candle at the bottom of my structure. That's a confluence. Hammer candle with volume, that's 2 confluences. The hammer candle is the actionable signal. We have volume. That's 2 confluences on my structure. If I go to my setup on the 4 hour, we have a swing low created. That's a confluence. And we're still at these key levels, which we already counted those confluences. So you have like at least 3 confluences on this trade. And I guarantee, and matter of fact, we can look at Duke right now, see what's doing. But I guarantee Duke gonna have another good week this week. At least Monday. Let me see where we at. Well, I don't see no movement. Trying to see what Duke is doing in the after hours. Oh, my thing's so slow. Okay, it hasn't moved yet. It's 0. It's like flat right now. I thought maybe it would have been started moving. Anyways, go back to Duke. Okay, so structure, setup. Now this is the swing low. My entry will be the break of that. And this is a new trade. Okay, so 128.64 is my entry that I'm going to be watching this week on Duke. And I'm just trying to take it back to the top of this channel, which is at about 130, if you will. And remember, we just broke all-time highs. So there's really no known resistance. And these are kind of some of the best trades because you're making new, like you're in undiscovered territory. So that's how that works. This is actually the perfect example. And Duke is in, what is Duke in? Utilities or materials? I think it's in utilities, Duke. Is Duke? I don't know if it's materials or utilities. Didn't have the best day. Oh, I'm not turning. didn't have the best day for the sector, but it wasn't bad. 0.38. I mean, I would say the only reason it's down is because you gotta have a pullback. You gotta have a pullback. Okay, it was running and we have our pullback. That would be my only reason why it was down. Even, I mean, 0.38% is not a bad drop. That's a pullback. That's pullback numbers. Now, if it was down like 3%, that's more than a pullback. That's a correction and all kind of other stuff. Okay, so this is actually, yeah. So we found structure. We got our candle. We got our setup. And your strike is going to happen whenever it breaks this. We don't know if that's going to be Monday, Tuesday, Wednesday, Thursday, Friday, or the next week. But this would be, I'll follow up on this next week if it ever breaks my entry. Okay, I'll come back and do a video just to show you guys how it played out. Because this is actually, I'm glad I looked at this perfect example of the 4S system. Okay, like I said, if you're a beginner, I know you just not going to get everything in like 3 hours. I'm going to post this video, but just repeat. You don't need to like deviate from nothing else as a beginner until you get a hold of it and understand. Then you can go and change it and do what works for you. But if you want something to follow for now until you get it, I would suggest that sector structure. Make sure you find your structure. If you don't do nothing else, find your structure. That's what's really going to help you. You have to create a bias. Find your structure and take your trades from there. Okay, now we were talking about last week, because the reason why I did this, it was some people talking about they work 9 to 5s and they can't trade like during the day. So this would be helpful too if you work a 9 to 5 and can't look at the charts all day. If I worked a 9 to 5 and I seen this setup on Duke, and I can't look at my chart every day, all you have to do is go to Duke. Even if you're a beginner, go to Duke, go to trade options, get you a strike price that's at least 30 days. If you cannot look at the market every day, you don't want to buy weekly contracts, you need at least 30 days. I really suggest more, especially if you're doing a 9 to 5. Okay. Let's just say 60 days. Go out and get those contracts so you have some time. See, you only have to pay $300 for this. I could buy that, and 60 days, you don't have to look at this every day. You could look at it at the end of the market or set your alarms to see if you're making money. But you'll be safe because the reason why you're safer, because remember that theta decay that kills your contract, the time? Now, the more time you go out, the lower the effect of like your theta. But the contracts will be higher, the premium, but that's fine. You won't lose as much money as the time goes on until you start to get close to your expiration. Okay, so going further out is going to be the safest bet for those that work a 9 to 5 that cannot look at the market every day like me. I work a 9 to 5, but I work at night. So I have the day to do whatever. And I'm usually trading. So I could sit and look at the market all day if I want. So you want to go far out, get that contract in the money, and then just let it sit. And I'm actually, since we talked about this, I'm going to add this to the watch list. Because this would be Let's just say we seen this and we got in Friday right before the market closed. We bought this contract. I'm going to add it to watch list. Okay. I'm even going to add, for those that, like myself, who are a little more riskier, January 26th. Okay, this is 30 day. Why they don't have the Duke don't have weeklies? Because where are all the October? What's today? October? Where are all the October contracts? Anyways, I'm going to do the 30-day one too. For the 130, I'm going to add that. This is just imagining we got in on Friday. So I'll do a video in a couple days to show you how much money you would have made on these contracts. Because I'm anticipating that Duke is going to be going up soon. We have 30 days and 60 days to make money on this. Okay. So I hope that made sense. I'm going to repost this on my YouTube. My YouTube channel is Wine and Wall Street. Let me type it. Just go to YouTube and find this wine. For those that don't know, I like wine. I'm going to do some wine content too. But I'm focusing on trading first. That's my YouTube. Yeah, and follow me. Y'all go follow me on YouTube because they say I need 50 subscribers before I could go live on YouTube. And I got like 30. You're welcome. You got me with the entry. That's going to help you. That's going to elevate your trading. I promise you, them entries. And then I have this is what I actually trade on. So I even have, and I think maybe one day I'm going to give out my chart setup. I don't know. But I have pivot points too that really help. They were game changers. So you just got to watch all them levels. But anyways, I hope that was helpful. Yeah. Oh, we did a crash beginners course on options. We just at the end. Anderson Legacy Investments. So, yeah. Oh, link in the bio for the Discord, y'all. I just made this Discord because people be wanting to talk during market hours. And I can't always get in my inbox on TikTok. So anyways, I created a Discord. The link is in the bio. That's where we can chat about the setups. Because like I said, I usually do a watch list on Sundays. I changed this Sunday to kind of dedicate to beginners because there was a lot of people last week that were beginners and didn't understand what we were talking about. But join the Discord. We chat in there. We're going to start chatting in there about the setups that I'm posting on Sundays. I'm going to talk about when I'm in trades because I usually post my story like, okay, I'm about to get in this. But I have a dedicated space for us now, Discord. And y'all better join while it's free. Clock that T. Join while it's free. Join while it's free. Okay. All right. I'm about to go, y'all. I'm losing my voice. Thank you guys. Thank you guys for hanging out with me. Join the Discord if you have more questions. And matter of fact, I think I could post the replay in Discord too. I got to figure all that out. I'm going to get it together, y'all. All right. Bye.